Hi, I'm Tom Lydon, editor of ETF Trends, and I'm here with Henry Fernandez, CEO of MSCI, and Jana Haines, who's head of index products for the Americas from MSCI. Folks, thanks for being with me.
Thanks for having us.
Thank you, Tom.
A lot of things going on globally, and MSCI being the preeminent index provider and partner with many big ETF issuers. You folks have a lot going on. Henry, why don't you get us started? What are some of the things you're most excited about from an index construction standpoint?
We continue to be extremely excited about the globalization of investing. I mean, that in this day and age in which there is so much attack on globalism, I don't think that's going to affect global investing in the world. We are also very excited about a lot of the work we're doing on ESG, environmental, social, governance criteria in the investing process. And that's probably better defined as long-term investing. And of course, we're very, very keen and working pretty hard on a lot of innovation in the smart beta, or what we call factor investing space.
Right. So Jana, talk a little bit about smart beta or factor investing, because the discipline provided in index construction is really near and dear to a lot of advisors' hearts today, because just buying broad market cap indices or even active, they're not as comfortable with overseas investing these days based on everything that's going on.
Yeah, factor indexes and factor investing generally is becoming more and more part of a mainstream investment landscape. When you think about the increased volatility in the marketplace that we've seen last year, you think about the various geopolitical events that we've experienced with Brexit and the US elections, about the interest rate shifts in the market. Factor indexes and factor investing allows investors to systematically view the investment landscape through yet another lens. Just like, for example, countries, sectors, we now have factors that allow investors yet another view.
Right.
And we're very excited about that.
So the great thing is there are more publicly traded companies overseas. 55% of global market cap is outside the US, but you take all these publicly traded companies and put them through the grinder, and only a certain amount come out the other side based on what factor you're screening for, correct?
That's exactly right. And one of the greatest contributions of MSCI, both from the research perspective as well as from the benefits and services that we provide to our clients, is the factor framework that allows them to systematically look at the entire family of factors and make sense of what's going on in the world.
Because really you represent not only a multitude of factor strategies, but some multi-factor strategies as well. You might get an index or an ETF that's wrapped around it that would have multiple factors, correct?
Absolutely. I think what it is that reflecting a little bit, factor investing has always been with us, for a long time. This is what we're working on, is the next generation of factors. Inside every active manager is also a factor investor, right? Either a small cap investor, a value investor, a quality investor, or momentum investor. So what we're trying to do globally and in the various domestic markets of the world is take a lot of that quantitative tools, a lot of that thinking, a lot of those techniques which were available to institutional investors, and make them available to everyone in the world. And one way to do that is obviously packaging a lot of those investment strategies or indices in an exchange-traded fund so that people can buy them. It's a democratization of the global investing process and the democratization of the factor investing process globally.
But how important, Henry, do you feel it is that there's a discipline? The fact that you can't hide from that discipline. If there's a stated discipline in that index, you have to stick to it, as opposed to a active fund manager who really can decide whether they like a stock or not, right? And they don't have to report for 90 days as far as what they actually hold.
What happens in an index is that you have a methodology. You have to be pure to that methodology. In the case of a factor, discerning methodology, whether it's minimum volatility or small size or something like that, then you have to stick with it in your rules, in your methods of computing the index time in and time out. So once that is packaged in the form of an investment product like an ETF, then what you have is a very consistent, precision way of understanding what that factor is and the return on that factor whether it's in a domestic market like the US, whether it's in a European market, or it's in a global market, whether it's in emerging markets or developed markets. And that's what the things allows you to do, right?
And finally, we talked a little bit about ESG. How popular is ESG? We're starting to hear about it more and more.
ESG is a growing trend across the globe, both in indexes as well as in approach how investors view the whole space of E, S, and G. It used to be in the past, the old way of ESG was exclusionary. What we're seeing today is very much an integration of environmental, social, and governance issues directly into the portfolio construction. And we have written numerous papers and research pieces to the point that investors are actually seeing added alpha from ESG type of integration into their portfolios.
And that's the key. There's been socially responsible investing around for a while, but it seems like you almost had to give up a little performance. You folks have come up with some great studies, and I read the study on gender diversity within corporate boards and corporate governance and management that was eye-opening regarding the performance from some of these companies that had more women involved at the top. That must be something that you're really proud of.
Absolutely. I think first of all, it's something that is better for the world, better for the free enterprise system, better for investments, because we internalize a lot of the externalities that get produced in our economic system. And those ultimately will produce alpha, will produce better returns. And as the world shrinks and more people are focused on these factors or these variables, it's going to get more and more incorporated into the investment process, and it's going to be more and more incorporated into the decisions of corporations, because otherwise you're not going to have access to capital.
Absolutely.
Because of the rationing that would exist by investors.
I would also like to add that MSCI took the #1 spot globally in assets that are linked to our MSCI ESG indexes in ETFs in 2016. So we're extremely proud of that.
Well, you're committed to a great space, and we're seeing more and more popularity there for all the right reasons. So again, Jana, Henry, thanks for giving me some time today. I learned a lot, and I wish you continued success.
Thank you, Tom.
Thank you.